Let me also highlight for all our viewers HCL Tech as well, and then maybe we can do a comparative study there. For HCL Tech, the Q3 results preview or the street expectations go as follows. The revenue growth here is expected to be anywhere between 11 to 12% year on year. Net profit growth is expected to be anywhere between 5 to 9% year on year. Margins are expected to grow by 100 basis points sequentially. There is an improvement that is truly expected there. The key investor focus will be on the progress towards 18 to 19% EBIT margin. What is the commentary around that? The deal pipeline, the conversion timelines, the discretionary IT spending outlook, the enterprise GenAI adoption and AI-led growth there. Investments in engineering and R&D products will also be important to be seen. Specific brokerage houses expectations go as follows. Axis Securities has come out with its expectations of revenue growth for HCL Tech to be at 33,395 crores. This could show a 11.7% year-on-year growth. Net profit to come in at around 4,995 crores, a growth of 8.7% year-on-year. EBIT they expect to be at 6,378 crores, 9.5% growth year-on-year. EBIT margins they actually expect at 19.1%, so on the upper end, 187 basis points of a year-on-year growth. That's a bullish expectation from Axis. Kotak Institutional. On Q3 profit, they believe there could be a 5% year-on-year growth coming in at 4,835 crores. Revenue could be coming in at 33,338 crores, again 11.5% jump. This is similar to what Axis has also expected. Revenue growth, they actually expect a likely cut there from 3 to 5% growth to just about 3.5 to 4.5% growth. So slight, expectations of projections that could be lower. Services growth seen at anywhere between 4.5 to 5%. EBIT margin guidance, they believe 17 to 18% to be retained. Axis has a bullish stance there. Let's try and understand on HCL Tech. So far in the last couple of quarters or last 2 quarters that we've seen for the current fiscal year, it's HCL Tech numbers that have likely been slightly better off than its larger peers, TCS and Infosys. How would you assess this time around the earnings would come in?
I would expect similar, because a few years back HCL actually started on its journey of getting into some products that it bought a product portfolio from IBM. The product portfolio itself was actually quite old, but with it you get some foothold into some of these very large corporations which have these softwares in the installed base. So, then you can actually start servicing them, getting new clients, etc. So, HCL Tech has been doing things slightly differently from the other, bigger players. So, probably their results will not, their results will be slightly, again, structurally a little bit better than, the Infosys, TCS, Wipros of the world.
Okay, got that. If I have to ask you on a pecking order, what would your preference be in the IT space among all of these companies?
I wouldn't pick any one of these, big four companies. I would probably go with the mid-tier ones where there is a lot more specialization. They're working on very specific, verticals. They have deep knowledge. So there are a few good companies. We all know. Persistent, we know Coforge, we know, LTTS. A few of these kinds of companies actually are doing fairly good work in the domain that they are experts in.
If you like the video, do like, comment, share and subscribe.